Luca, thank you, and a warm welcome to our guests today, both here in the room and also out on the web. I know some of you joining us today have traveled a long distance, and so we appreciate your interest in our company. Let me also add my thanks to the Nestlé USA team, led by Steve Presley, in putting together this program for today and tomorrow. We believe it's a real strong program, and I hope that you will come away with two main conclusions. One is a true appreciation for what Team Nestlé has accomplished since the last conference in making good on our commitments towards 2020, because I think there's a lot of good progress, and we hope we can drive that home with you today. And the other one, beyond 2020, is the sheer fascination for the opportunities we're pursuing, the initiatives we're putting in place that will propel us right into that new decade and make it a prosperous and strongly growing decade for this company going forward. Now, here's a quick summary, some key messages from my perspective. We believe and we strongly confirm that we have a clear path to achieving our 2020 targets. I think we've made good progress in sharpening our nutrition, health, and wellness strategy. And what's very important to us, we pursue this value creation strategy with a balanced model that emphasizes growth, margin, and capital efficiency. In this context, and with all the things that have been accomplished, let me express my thanks, my sincere thanks, to the more than 300,000 Nestlé associates around the world who have put in a lot of effort, a lot of intensity the last few years in basically making progress towards these targets. I think you will have seen that there's significant progress. And again, this took extra commitment, and this drive, this positive energy in the company is really taking us forward. When it comes to this day, and when it comes to some of the key things we want to convey, this event is going to be a little different in nature from the one in London. For those of you who participated in London or followed on the web or read one of the transcripts, London, against the backdrop of its time, was much more financial in character. It was important for us to lay out a financial framework about our midterm targets and basically give credibility to those targets, show you how those are being done. Today, it's much more about the granular detail. So not just the zones, but also the categories, and hence there's a broader group of executives presenting, and we'll give you the geographic strategies, but also the category strategies that are supposed to make it happen on the journey towards 2020 and also beyond. The next slide focuses on areas of improvement that go back to my presentation in London in 2017. So the bullet points you're seeing on the left-hand side are exactly the areas of improvement that I highlighted at the time. On the right-hand side, you see some of the key activities that have happened since. And I think it's very clear that we have started to accelerate our nutrition, health, and wellness strategy and have given it more focus. I think our decision to review the Nestlé Skin Health business going forward, that was a key step in really driving home what we mean by food and beverage and nutritional health products. We've seen significant portfolio management activity, totaling almost 15 billion Swiss francs for the last 2 years. Then when it comes to organic growth, when we were presenting in London, I mean, we pointed out to you how important that is to us, but the truth was also we were still losing airspeed when it comes to organic growth, and we hit a low point in the fourth quarter of 2017. But it's important to note that starting from 2018, quarter after quarter, we've seen steady progress, and that momentum now carried into 2019. The third item, balancing growth and margin, in particular the efficiency aspect of our strategy. I think we laid out a credible plan to you in London, and I hope you will see from François' presentation this afternoon that we're making very good progress on this path. As you know, this was not a dramatic margin improvement target. This was a well-balanced margin improvement target that was supposed not to undermine growth. What I hope is that all of you as investors who may have been underwhelmed at the time, that you have seen and you've developed a new appreciation for this balanced approach. Because what we deliberately did not try to do is what would be a carpet bombing type of restructuring program where you spread fear and intimidation in a large organization and undermine the underpinnings of future growth. What we've done is precision engineering. We're going after the fat, not the muscle. We're doing very surgical moves where we see efficiency opportunities, and we do them in a way that hopefully they do not undermine the growth going forward. And I think the results since have borne that out. So that balanced model, I hope that has found new appreciation among our investors, and it's working. It's not undermining growth. Improving capital efficiency, François will talk a lot about that. Very steady progress over the past few years, going back to 2014, 2015, you're seeing a clear line of improvement, and we're proud of that. And finally, driving speed and simplicity. The two keynote activities in that regards were clearly the transition of our nutrition business from a globally managed business to one that's organized by the 3 zones geographically, and then also that faster and leaner innovation model that Stefan is going to be talking about in his presentation. Let me quickly touch upon and reconfirm our strategy. The top part of the slide is unchanged from London, food and beverages as core. And let me also point out, just as I did in London, this whole aspect of convenience of our products for a modern, time-constrained lifestyle. So it's not only about healthy and nutritious. When you think about Nestlé and the place that is made for Nestlé, then I think convenience comes in very quickly as one other key criterion to making food and beverage products accessible for people that live a time-constrained modern lifestyle. Most food and beverage products can be made from the ground up, but that's not realistic with the kind of lives most people are leading, and hence this is the kind of extra value that we're adding. The second part, when it comes to Nestlé Health Science and that focus on nutritional and metabolism-related health products, as opposed to the wide space of consumer OTC healthcare, I think this is where a lot of the sharpening of our strategy has occurred. As you know, at the time when Skin Health was a firm part of that, it was pretty much encompassing the whole consumer OTC healthcare space, going from nutritional products all the way to suntan lotion. I think now what you're seeing is a much more stringent focus organized around the Nestlé Health Science business, and the Nestlé Health Science CEO, Craig Behar, will present on that this afternoon. And the last but not least, it's important also in this day and age when people look towards business as a force for good to see the importance of our creating shared value approach. I think this whole notion, if you're saying that you are in it for the long term, if you really mean that, then Sustainability Day has to be part of that. And I think that long-standing commitment to creating shared value is paying off and is resonating very strongly with consumers around the world, with investors, with regulators, anyone we're dealing with. This slide captures the essence of our long-term value creation model, that balanced pursuit of growth, margins, and the prudent allocation of capital. I will focus in my presentation today on the left-hand side, just as I did in London, how to increase growth. François, in his presentation, will focus very much on our efforts in improving margins and also the prudent allocation of capital. You know, this slide from previous presentations, this is about the validity of pursuing high growth categories and high growth regions when it comes to moving up the group average organic growth. So the setup of the slide is not new, but we updated it with the full year 2018 numbers. And you see in the relevance of pursuing that growth strategy around high growth categories and also high growth regions. So looking at the top row, the high growth categories, you see that based on full year 2018 numbers, the 4 key growth categories of coffee, pet care, nutrition, and water with Nestlé Health Science, they stand for 57% of our revenue, and they generate 61% of underlying trading operating profit. When it comes to geographies, the emerging markets stand for 42% of revenue, and they stand for 45% of our underlying trading operating profit. So being strong and growing fast in emerging markets is not dilutive to our margins, and being strong and putting additional emphasis to these high growth categories is not diluting our margin when it comes to the group. You're also seeing that significant growth differential, 1.9% versus 4.0 for the high growth categories, and 1.6% versus 4.9 for developed markets versus emerging markets. Now, we laid this out before, but let me also use this opportunity to correct 2 fairly common misperceptions. One is that even in a high growth category and high growth region or market, you can have quarters, you can have years that are not high growth, and that's no contradiction. So there's a difference between what a category and what a market long-term has to offer, and how specifically in a given quarter or a given year you're going to be performing. A good example, as you all know from previous conference calls for the quarters, is our waters business, where we believe in this high growth category. It's one of the fastest growing categories we're in, but we have work to do to position the business towards these high growth pockets in this category. And when it comes to geographies, think about Brazil, where I think we patiently did what we had to do over the past 3 or 4 years to position now the business for renewed growth in this very important South American market. The second misperception is that when we started to talk about this, even while we said that it was not going to be a portfolio management guide, while we said it was only geared at internal growth spending, a lot of people took it as a pointer where our portfolio management was going to go. And that's a misperception I would want to correct. I believe that our non-high growth categories have incredibly important things to offer to the company. Not only some of the value and the fuel to actually support our growth, but you also see, as you drill inside these categories, incredibly attractive high growth pockets. And this slide lists some of them. Let me point out two. One is Patrice in his presentation later will give you more detail on the recent development of KitKat. You see here this very nice high single-digit OG performance based on the full year 2018 numbers. So this is a wonderful premiumization story. And the other one, Stefan Palzer will talk about that segment at the lower left-hand corner, and this is the Sweet Earth and Garden Gourmet plant-based offerings, in particular some of our recent efforts when it comes to the plant-based burger offerings, which are very successful. And here again, a very interesting development inside the food or culinary category that's really paying off very nicely. So let me talk next about addressing underperformers. And I've listed 4 examples here: Skin Health, Gerber, our US frozen food business, and the Nestlé Waters business. So on Nestlé Skin Health, as you know, we have put this business under strategic review, but it is important to point out what has been accomplished over the past 2.5 years, and this was nothing short of significant. We had a business, if we had pursued options for this business 2.5 years ago, we would have found few takers. But we did put it on a dramatically different and more competitive cost base, with about 1/4 of the workforce less than before. We gave it very defined, articulated strategies in its 3 core business segments, and we also positioned the business for new growth. So as you look at 2018, beginning of 2019, you have a business that is dramatically more profitable and at the same time high growth in a very attractive environment. And that's paying off now. And hence, this whole notion of doing that disciplined work, I think is a very important sign to the organization. It also should give you confidence that this is a company that can execute if we focus on something and can make it happen. Next, on Gerber, we talked about this on previous occasions in the past. I think it is fair to say that while this has always been and always continues to be an iconic brand, we were slow to embrace the organic opportunity over the past decade. I think now we've done this with a vengeance. We from the inside out, have redeveloped this product lineup, and we've given it not only a much broader organic offering, but also more interesting, more exciting, more exotic ingredients, new packaging, more appealing visuals. And we're also developing very, very nice international growth opportunities, such as, for example, a thriving cross-border e-commerce business with China. On US frozen, we'll talk more about that at a later point today. Clearly, also going back to previous opportunities, I know there's a lot of doubts among you, but I think we were right about the category fundamentals and the renewed interest that younger consumers have in this category. And I think we're now applying this faster and leaner and more attuned innovation model to this category to serve the market constantly with exciting, strongly resonating choices that keep the excitement up and will contribute to future growth, some of it already paying off in that first quarter of 2019. And last but not least, in Nestlé Waters, we do see competitive pressure at the low end of the pricing scale, especially when it comes to case pack business. But we do also see exciting growth opportunities in the premium range, our international premium brands, which are truly iconic brands and resonate strongly in the US and elsewhere. We're seeing very strong growth in flavored water offerings, and we also see a strong future opportunity when it comes to functional water offerings, and over time, those will carry the day. Quick update on portfolio management, and Francois will elaborate on that in the afternoon. I think very busy period in 2017 and 18. In total, about 50 transactions or reviews, covering about 9% of our group sales. Some of you remember the statement in London that we were pinpointing about 10% of group sales when it comes to buying and selling. And there was a frequent question whether this would constitute an upper ceiling, yes or no. The good news is no, it doesn't. So this portfolio management will go on, and I think 2019 is already shaping up to be another busy year. And the purpose of the 10% number in 2017 was to show you that we meant business and we were serious about portfolio change. At the time, if you remember, there were only two transactions, recent transactions known. One was the review for US confectionery. The other one, just a few weeks before the London event, was the acquisition of Blue Bottle Coffee. And hence it was important to us to show you that we really meant serious change. I think by now no one is doubting that anymore. And last but not least, I think this slide is almost a summary to the presentation you're seeing in a few minutes from Patrice and Stefan Palzer. This is about speeding up science and consumer-driven innovation, brought to the market faster, and then being continuously updated in versions 2.0, 3.0, 4.0 to constantly resonate with consumers and bring excitement to the categories we're playing in. So this whole notion, how that works, that's going to be the main content of the presentation that Patrice and Stefan are going to give to you. When it comes to driving organizational agility, again, the two headline grabbers for the last 2 years were clearly the migration of that nutrition business, which has been pulled off very, very successfully, and then also the whole reorganization that Stefan Palzer has led from the beginning of 2018 in our research and development area. But beneath that, there's hardly a week, hardly a month going by without some additional step that we're taking somewhere in the business to make it more efficient, more agile, faster, delayering, increasing span of control, and overall just making it a faster, leaner, and more responsive organization. And I think some of that is clearly showing through. Now, in this context, let me also say we get a lot of ideas from the outside how to organize the business. And what I would like to very strongly confirm is our strong allegiance to the core organizational model, which is the matrix between the three zones where the business is organized by region, and then the strategic guidance that comes from the strategic business units. That is the backbone of our business. It covers about 80% of our business volume, and that matrix works. I know the word matrix these days is not exactly in fashion, but when a matrix works, it does beautiful things. And when you think about what the alternatives would be, if you only organize by geography, you would end up with a sprawling conglomerate. And if you only organize by global businesses, in a business that is as local as food and beverage is, you would miss out on a whole lot of local opportunities. I think we are bringing together the best of both worlds. And just as an example that this responsiveness is not coming at the expense of speed and agility, just look at the recent fast launch of our Starbucks coffee range, which happened basically between last August and March. That was done under this matrix. So this matrix can perform, and it can perform really, really fast. And we're constantly fine-tuning that matrix to get the most out of it, but it's important for all of us to confirm to you it works, it delivers, and it's the right business model for us. The next 3 slides, I'd like to talk about this whole notion of creating shared value, which again, it's finding renewed interest with our consumers and with the public around us. But it's not a new thing for us. This is something that really, as a mindset of doing business, goes back to the foundation of this company more than 150 years ago. And the thought pattern that when you're in business for the long term, all sides need to benefit, that's really underpinning all of it. You can't expect, if in a deal, if in a transaction, if in mutual dealings with each other, if one side is always the loser and the other side is always the winner, then things over time do not work out. And this whole notion of making everyone at the table fulfill their dreams and ambitions and coming together and realizing their objectives, I think is very important to us. And I think we live and breathe it day by day. So on the left-hand side, you see that we give this a very important, very fundamental position. It resides above compliance and sustainability as the true mindset on how we operate this company. On the right-hand side, you see the three essential dimensions on how we apply this thought pattern. So one is for individual and families. So think about, for example, our nutritional strategies and improving nutrition for the public. That is focused on individuals and families as consumers. The next level is for the communities around us. So think about the several hundred locations we operate around the world and what we would want to give back and do with these communities to be sure that they see us as a welcome citizen. And then last but not least, of course, for the planet, there's a whole lot of planet-wide global issues that we're dealing with today. Think about CO2 emissions, think about plastic waste. And of course, any company will have to face those and have to show what it does to address those issues. Here from left to right, three initiatives that we're focusing on for this year that we highlighted in earlier presentations. One is contributing to healthier lives, and especially with our Nestlé for Healthier Kids campaign that was kicked off last year and gets continued to be scaled up and rolled out this year. Second, we've put a lot of effort over the past year into contributing to a waste-free future, and in particular addressing the plastics waste issue. Again, under the leadership of Stefan, we started an Institute of Packaging Sciences to find novel solutions, novel materials. We're exploring new business models, and also we are participating in all sorts of efforts that either help establish recycling systems or even address some of the damage that has been done. The third priority area is fostering diversity and inclusion. Again, for a global company, this is clearly the right thing to do, and this is something where Nestlé can make a difference, and we've always stressed this, and we've given this new intensity under the leadership of our new Executive Vice President in charge of human resources. And last but not least, on the right-hand side, here's been a mainstay. This has been a mainstay of the business ever since it's been founded. This is the strong communities and supply chains that this company has been focusing on. Think back to the time when the company was founded in Switzerland and very dependent on dairy supply, very much in touch and in tune with fragile agricultural communities around the world. So this whole notion of dealing with them in a way that they can be your long-term partners, that has been applied to many other agricultural commodities that we're buying. As a final slide on this creating shared value mindset, let me talk about communicating that through our brands. And Patrice will elaborate on that later in his presentation. But the notion to me that's important is, as much as all of the other communication tools are necessary, consumers these days are not buying sustainability reports. They're not buying high-level government or NGO contacts. All of these are important. But when it comes to the consumer, what counts is a product and a brand on a shelf, be it a real shelf or a virtual shelf, winning out over some of the other products. And those products and brands telling the story in a convincing manner. And this is something that we make a top priority in our marketing area. In one brand in this context, I wanted to bring to your attention that doesn't get so much attention here stateside, but is certainly on a tear in Europe, is our Garden Gourmet brand. We've been at this for more than 30 years. We're very consistently developing this towards a vegetarian and vegan offering. We're doing a lot on recyclable packaging and avoiding plastics packaging in the future. And this is also our key brand when it comes to something that has gotten a lot of attention recently, and that's our plant-based burger offering. As you know, this is a business opportunity that I think a lot of you have been asking about in recent weeks in light of some of the other competing offerings in the market. What I wanted to underline in this context, and you'll get more information from Stefan Palzer on this later on, this is a product offering where we believe we have a very, very, very competitive product in the market. Burgers these days are not only a US opportunity, just like pizza, they have become a global food. We're pursuing this opportunity on a global scale. We're committed to versions 2.0, 3.0, 4.0 that will be at the top of this market. And we already have a very exciting offering and very important chain customers being signed up. This brings me to the final section of my presentation, just a brief recap of the financial returns over long periods of time. So all of the efforts you've been seeing here that I described to you, I think have been translating into very consistent total shareholder return performance, whether you look at it over a 10-year, 5-year, 3-year, or 1-year time horizon, I think very consistently the company beats out the relevant stocks, food and beverage index. And on the right-hand side of the slide, you see that that does not only apply to the stock price performance, but also to a very disciplined return of capital to our shareholders, be it in the form of dividends or share buybacks, just like the latest one that's still underway and that is targeted to be finished by the end of this year. And so this brings me to the end of the presentation. And again, this is the scorecard that I showed you at the beginning. So the same bullet points, the same ones that are highlighted in London. And the key message is a lot has happened, but there's a lot more to come. And we're focused on this, we're dedicated to this, we're making it happen across all of these 5 dimensions. There's a lot more activity going on, and you will see a lot more coming through. And that gets us very excited when it comes to making good on the 2020 commitments, but also then on the wider growth and earnings ambitions beyond into that new decade. With that, that completes my presentation.